Ladies and gentlemen, welcome to Woodburn Accountants and Advisors webinar series on what you need to know about accounting and tax in China. Have you created a budget for your China investment? Have you calculated your registered capital correctly? Have you been able to open up a corporate bank account? Do you know how banking works in China? Have you the need to issue VAT invoices? Do you know the difference between a general VAT taxpayer and a small-scale taxpayer? Have you started negotiating your tax with your tax bureau officer? Have you thought about creating profit repatriation strategies? These are all the questions that we are looking to answer for you in this webinar series during this week. And today specifically, we're going to be looking at the importance in understanding the invoicing and tax system in China. But as we do with all our webinars, we have a couple of administration slides. So please note, if you are new to the GoToWebinar system, with any webinar, we may have some technical difficulties due to internet instability or firewalls that may exist. So please don't exit the webinar. Please do stay on the line. If you lose me, I should be back on within about 30 seconds, if at all 1 minute. When you go online, if you're having issues with your sound system through your tablet or laptop, you have the option of switching to a landline. If you click on telephone instead of mic and speakers in the audio section of your control panel, you will receive a dial-in number, an access code, and an audio PIN, where then you can listen in through a landline. Note that there are charges for this, but the sound quality will be much better than if you use your tablet or your laptop. Please don't be shy. I aim to hit a 10 to 15 minute Q&A. Yesterday, nobody asked any questions, so I asked some questions that I get a lot from clients. If the same happens today, I've already written up about 3-4 questions that are very, very common when talking to companies. But if you do have any questions, please add them into the questions section. If you've got comments as well, if it is very case specific, then I will reach out to you individually to help you. Please be patient with the webinar series this week. It's a very full schedule, so if I don't get to you by Friday, I will most certainly get to you by early next week. Now, if you would all be so kind, this is just for me to know if there are any issues with the sound system. If you could click on the hand button in your control panel, that will allow me to know you're listening in. If you re-click that button, then the hand will also disappear. So as mentioned, the topic for today is how the invoicing, Fapiao, and tax system works in China. For those of you that are first-time Woodburn webinar series people, then allow me just to briefly introduce who we are. Woodburn Accountants and Advisors is specialized 100% in inbound investment into China and Hong Kong. What we do is we basically help foreign investors in terms of establishing, managing, and administering their own entities in both jurisdictions of Hong Kong and China. We help also with additional services like market entry advisory, pre-investment advisory, cross-border advisory, tax optimization structures, corporate restructuring, and the general administration services that most people don't tend to like to do, such as accounting, tax, and payroll. All of our clients are international. They're all looking to do their first jump into Asia. Most of them start off in China, but also those that start off in Hong Kong. Many of my clients are doing a variety of different things, whether that means producing themselves or using third-party manufacturing companies, exporting into China, exporting from China, and then offering a wide range of different services, everything from research and development all the way to architecture, urban planning, to healthcare, etc. Also education, for example, is another area. The topic, this is just a minor disclaimer, the topic for today is actually and should be case specific, meaning that you should really be talking to your tax officer as to what will apply to you. However, in order for people to just basically understand what VAT is, how the VAT system works, learning the terms and definitions, That is the whole purpose of today's presentation. And I'll be going through all of that as well as some tips and compliance procedures at the end. Just so you know who's talking to you, a little bit of a face to the voice. My name is Christina Kohler-Coluccia. I'm the head of business advisory at Woodburn Accountants and Advisors. I've been in the corporate services sector in China since 2003, helping numerous companies go into the market and expand within the market, as well as go through mergers and acquisitions, and exit the market ultimately, which some have done. So let's hit off today's presentation. We've got a very long agenda, again, because my goal is to really give you an overview of what VAT means. But to start off today's presentation, I want to deliver some great news if you haven't heard it yet. January 9th, 2019, Chinese Premier Li Keqiang, he basically set forth measures to create tax cuts and exemptions for small, medium-sized companies. And the idea is that these measures would apply to taxes being paid from January 1st, 2019 until December 31st, 2021. So for a period of 3 years. The aim of the government is to have a tax cut of about 200 billion renminbi for SMEs, startups and SMEs in China, basically to stabilize the economy and boost employment. So there are certain criteria that you need to reach in order to be able to benefit from these various tax cuts. And ultimately, the beneficiary companies, so the shareholding companies, they need to have assets of under 50 million renminbi, fewer than 300 employees, and they have to have a taxable income of less than 3 million renminbi in China in order to be able to benefit from these new tax rates. In addition to that, the companies cannot be within sectors that are listed as non-restricted or non-prohibited. So what does this mean? And although the topic for today is about VAT, it is also important to talk about profits tax, or in China, it's called enterprise income tax. So the biggest tax cut has actually come into this category, okay? So basically, if you are a startup in China, or you're building up your business, then you can enjoy this. And what this basically means is that companies registered in China, so limited liability companies registered in China with an annual taxable income of less than 1 million renminbi can enjoy a profits tax or enterprise income tax rate of 20%, but where only 25% of the income is taxed, with the remaining 75% being tax-free. So ultimately, you're looking at an effective rate of only 5% on the 1 million compared to 10% previously. And for companies with an annual taxable income of between 1 and 3 million renminbi, they also enjoy a 20% tax rate on only 50% of their income, with the remaining 50% being tax-free. So it leads to about a 10% effective tax rate for the 1 to 3 million category. So big tax cuts for companies that are really starting off in the market. And I think this is wonderful news for any company that is looking to go into the market. Get your head off of the fact of this 25% profits tax rate. This will only come once you hit above 3 million renminbi in terms of annual taxable income. Okay, so basically you're looking at 5% up to 1 million, 10% between 1 and 3 million, and then thereafter you're looking at a tax rate of 25% on the remaining amount. So it gives you great leniency to build up your business and not feel worried or pressured about the profits tax that exists. Profits tax is calculated in China on a quarterly basis. The fiscal year in China is January to December. And then you have an annual profits tax declaration the following year that has to occur once you've completed your audit. But let's not lose track. The whole point of this presentation today is to understand value-added tax in China, to understand about the Fapiao system, what it means, and what it entails. So let's start off with what is value-added tax in China. So first of all, VAT is a sales tax, and it is a major revenue item for the Chinese government. All right. So they have extremely rigid rulings, more so than any other country in the world in terms of how you maintain invoices. And they truly do want to tackle tax avoidance and tax evasion for any form of transaction, whether it be trade or service that is occurring within your entity and structure. So if you have established your entity in China and you have a limited liability company, then the first category that you will be designated is as a small scale taxpayer. All right. A small scale taxpayer basically means that you cannot offset the VAT that you are paying off of your original expenses, okay, or from suppliers. And we call that an input VAT. However, if from day one you know that you are going to achieve certain transaction levels, you can immediately apply for the general VAT taxpayer status so that you have the ability to reclaim or offset the VAT on purchases, sales of goods, and services. All right. Now, if you are content with being a small scale taxpayer, and really you should have somebody analyze this for you, whether you stay as a small scale taxpayer or whether you go up to a general VAT taxpayer. But regardless, if you hit a turnover of about 800,000 RMB within a fiscal year, you will be required to upgrade yourself to the general VAT taxpayer status. Okay, so 800,000 RMB is the general threshold. You need to talk to your tax officer within your district, meaning in the district where your registered office address is located, in order to be able to understand what is the threshold for them. I've put a general amount here, which is pretty much common throughout Shanghai and the major cities in China, but you really do need to talk to your tax officer about this. If you are a general VAT taxpayer, then VAT is payable monthly. If you are a small scale taxpayer, then VAT is usually paid quarterly. But again, there, you need to talk to your tax officer as to what their requirement is, whether it is monthly or whether it is quarterly. The definition of a general VAT taxpayer, this is the most simplified formula. VAT payable equals the output VAT minus the input VAT. Output VAT is what is invoiced to customers. Input VAT is what you have paid to suppliers, okay? If you are a general VAT taxpayer, you have the ability to issue VAT special invoices or VAT general invoices, okay? And I will go into the definition of what these invoices are in further slides. And basically, if you are issuing VAT special invoices, which is what you want to do, that should be your aim if you're a general VAT taxpayer, then you can make the various deductions and offset, you can reclaim and offset the input VAT, but it needs to be declared within 180 days by the other party. All right. Now, in terms of general VAT taxpayer rates, as of April 1st, 2019, the rates have been updated. This is the second amendment within 2019. It is positive because they have been lowered. All right. In general terms, sale of goods is now at 13%. If you are providing any form of service, business supporting service, you are at 6%. And if you are in any other industry or sector as highlighted within this table, then you can reflect on the percentage rates. basically what has happened is the government has reduced the percentages, again, something very positive. However, we are predicting that further changes will occur. Not sure if it's going to happen at the end of this year or next year, but the goal ultimately is to do further reductions and into two rates. So right now you see 3 different rates. It's going to be going down into 2 different rates. Very difficult to explain when that might happen, but since April 1st, these are the rates that are applied. Now, if you are a small scale taxpayer, and as I mentioned, when you incorporate your company, you are initially designated as a small scale taxpayer. If you want to immediately become a general VAT taxpayer, there is an application that you have to do. You will have to show contracts and contract values that are up and coming to prove that you would like to be a general VAT taxpayer. And the beauty of it now is that it really does take only about 2 to 5 working days to get approval to become a general VAT taxpayer. In the past, it took like 2 months, if not 2.5 months. So speed and efficiency within the tax bureaus have definitely improved in order to become a general VAT taxpayer. As I said, there is a threshold of approximately 800,000 renminbi in turnover that has to occur within a fiscal year where you automatically get upgraded. If you want to stay as a small scale taxpayer, you are absolutely welcome to stay as a small scale taxpayer. Now, as a small scale taxpayer, you have to apply a rate, there's only one rate, of 3% VAT on your invoices. The downside to this is that a small scale taxpayer cannot deduct their input VAT, which means that any VAT that you pay off for, I don't know, expenses or to suppliers, it's cut out. You don't get that back. And you cannot deduct it. So that can be a disadvantage if your volume of business is increasing and the value of your business is increasing. As a small scale taxpayer, you can only issue VAT general invoices. You cannot issue VAT special invoices. So this is something very critical that you have to understand. The implication of this is that potentially you may lose out on bids and projects from customers who request you to be able to issue VAT special invoices. Now, there have been changes. You cannot issue a VAT special invoice yourself, meaning through your printer and your system. If now a customer requests it, you can go to the tax bureau and have them issue the VAT special invoice on your behalf. It's not the most efficient and convenient, but you have the ability to do that. In addition to that, as of March 1st, 2019, there are now 8 industries and sectors where you have the ability as a small scale taxpayer to issue VAT special invoices yourself. It's a bit complicated because it's in leasing, in scientific research, in residential service, hotel industry, construction industry, manufacturing. So if you're just in general services, it still doesn't apply to you. Now, the biggest advantage, together with the tax cuts for profits tax that occurred Jan 1st, a huge advantage now for small scale taxpayers and generally any business, because as I said, you know, once you set up your company, you're going to be designated as a small scale taxpayer, is the fact that companies whose sales are less than 100,000 renminbi per month will be exempt from paying any VAT. So you will still be able to issue the invoices and you are required to issue the invoices. But if your revenue is less than 100,000 renminbi in a month, or 300,000 renminbi in a quarter, then you are exempt from paying VAT. I've added the quarterly amount here of 300,000 renminbi because with some tax bureaus, you only have to declare VAT on a quarterly basis as a small scale taxpayer. So depending what your tax bureau says, they will either ask you to declare monthly, which case it's a sales or revenue level of 100,000 RMB, or if they ask you to declare on a quarterly, it's looking at 300,000 RMB. Huge advantage. So if you are under these amounts, you're VAT exempt. Now let's look at the definition of the Fapiaos and their liability. So a Fapiao is a legal receipt that serves as proof of the purchase of any goods or services. And the larger Fapiao invoicing system, it's an essential component of the tax law in China, and it does require a lot of compliance by companies, okay? One of the things, for example, that the tax officer, your tax officer will request and may even want to visit your office to see that you've done it, is to buy a safe where all your Fapiaos, whether they're general or special, will be kept. In short, any type of Fapiao is treated as being like gold. It needs to be kept safe, okay? And they will request you to purchase a safe in order to be able to protect it and make sure it doesn't get lost. You have to keep in mind, now I don't know what the regulation is per bureau, but in general, again, if you lose a Fapiao booklet, any individual receipt that you lose, which hasn't been printed on, you will have to pay a fine of 10,000 RMB per sheet that you have lost. It's not a joke, because what the tax bureau is concerned by is that these Fapiaos go on the black market and are illegally used and mistreated, which does happen, okay? So these are vital pieces of documents, and penalties can be very high. We tried to liquidate a company in the past that had lost their booklet, couldn't find it. And the outcome was actually they had to pay 10,000 RMB per sheet. And generally there's about 50 sheets within a booklet. So it was a hefty penalty that they would have had to pay. So you have these various Fapiaos that are actually required. So the first one that we're going to look at is the general VAT Fapiao. It is basically used as evidence of payment where special VAT Fapiaos are not applied or not required, okay? Although taxpayers can choose whether they want to issue a general VAT invoice or whether they want to use rolled invoices. For example, if you go into a taxi cab, they're using a rolled up invoice. They're not using the proper Fapiao sheets. It depends what industry and sector you're in, whether you're going to use the actual sheet booklet or rolls of invoices. The general VAT Fapiao, as I mentioned, is only for small scale taxpayers. It will apply to general VAT taxpayers in certain industries. For example, if you're in the retail of cigarettes, alcohol, food, clothing, etc., then you're going to use up the rolled up invoices. The special VAT Fapiao is a little bit more complicated. These are booklets of sheets where you have to be much more detailed as to the description of what is inside. This is what a special VAT Fapiao looks like. You're going to have to put the seller and buyer's name and business address, their tax reference, the description of the goods and services. You're going to have to separate what is taxed, what is not taxed. You're going to have to provide the bank account information of the buyer and the seller, the sales price in RMB, as well as then the VAT calculation. This Fapiao is going to be printed out through a printer that needs to be purchased at the tax bureau, and your invoice seal put on it. Okay? Now, purchasing VAT Fapiaos is something that, again, is not easy. The number of Fapiaos that may be printed and the capital value of each individual Fapiao sheet are subject to quotas. The company's local tax bureau, the district tax bureau, will determine the quota based on the taxpayer's actual business operation status. In general, what happens? You go to your tax bureau, you have your first formal meeting. You need to be able to communicate with them about what type of transactions you are going to be doing and performing within your entity. You'll also have to talk about values, what kind of volume and value of business is going to be generated. If you are a small scale taxpayer and the number of transactions is minimal, then they are going to allocate you a booklet of sheets that is between 25 and 50 sheets. Each sheet is worth 10,000 renminbi, which means if you're going to have a transaction that is 11,500 renminbi, you're going to issue 2 sheets, one for, let's say, 9,500 or 9,999, and the next sheet with the remaining amount. You will be issuing 2 sheets, okay? If your transaction value is higher, let's say 90,000, you will be issuing 9 sheets, okay? Now, if you hit a certain consecutive amount of revenue, then you can increase yourself, meaning you will then get booklets of 100,000 renminbi, all right? But this is an application procedure, and you need to show proof of your business volume and value that is going through the company. Generally, the rule of thumb is if you hit sales amounts of 300,000 renminbi per month for a consecutive period of 3 months, then you can upgrade to from the 10,000 renminbi per sheet value to the 100,000 renminbi per sheet value. If you have special transactions, so for example, you've won a bid on a project that is worth 1 million renminbi, and you need to be able to go out there and issue invoices immediately, you can apply at the State Tax Bureau and show them the contract, show them the invoices, and they will then help you to issue the invoices. Again, each sheet being 100,000 renminbi. Now, this sounds probably very daunting and overwhelming. Whether you are a domestic company or a foreign company, you have to go through this. Now, some critical information. When you register your company in China, you have to have a meeting with your district tax bureau within 30 days of your bank account opening. What is going to happen is you're going to sign an authorization letter with your tax bureau and your company, as well as your bank, to allow the tax bureau to automatically deduct tax funds or tax liability once declarations occur. You will then have to have during this meeting, you will also be talking to the tax officer about your business, the types of transactions you're going to be doing, whether they're trade or service, what is the volume of business, what is the value of business. The minute that you want to be able to apply for general VAT taxpayer status, you do the application. Once approved, you will be requested from the tax bureau to purchase a printer and the VAT software system. The printer will be kept in your office, the VAT software system downloaded on your computer, and any time that there is a transaction, it will be uploaded into the VAT system, and your monthly VAT payable amount will be declared. It's automatically connected with the tax bureau. If you're not outsourcing this function to a provider, then whoever you are appointing to do this work will have to go through a training with the local tax bureau to understand how the software works, how the printer works, how the system is to purchase VAT invoices, etc. So let's now look at actual transactions. And the first one we'll look at is looking at the VAT on trade transactions. Now, generally speaking, if you are doing trade and you want to be able to offset, the input VAT, then you need to become a general VAT taxpayer. Now, I have the perfect example here, which I had actually also highlighted on Monday. We had a client back in the day who was so excited about starting off the business that they had shipped off a container prior to actually getting the general VAT taxpayer status. The shipment arrived, and because they were a small scale taxpayer, And mind you, this was a 40-foot container. Value of the container was 500,000 RMB. They had to, they could not offset the input VAT for this container coming in. It was a huge, huge blunder, and as a consequence to that, it affected their budgeting. So be aware of starting off trade transactions and understanding shipment flow if you don't have this general VAT taxpayer status. Okay, be really aware of the whole flow of how everything is moving along. On import transactions, goods arrive, they have to go through customs duty. Input VAT and customs duty need to be paid at the same time in order for the goods to be released. The input VAT, if you're a general VAT taxpayer, will then be deducted once you sell the goods to your end customers and add the VAT on those invoices. Be aware that based on the table that I showed you, the VAT will be either 9 or 13%. Generally speaking, it's going to be 13%. 9% is usually for agricultural and utility items. If you are in a sector where it's luxury goods, alcohol, tobacco, vehicles, you will also have a consumption tax that has to be calculated within this. Okay. Domestic transactions are the simplest because you are buying from someone and selling to someone. There is VAT allocated on both sides of that transaction, and your VAT payable will be the output minus the input. On export transactions, there is basically 0% VAT on the export, and you can also apply for a VAT rebate. You need to really calculate properly what the VAT rebate is and to which country you are exporting, particularly now with the trade war that is existing with the US. VAT on services is, again, very simple. We consider this a domestic transaction. Generally, it is more one-sided. For service companies, anytime that you issue an invoice, if you're a small-scale taxpayer, it'll be 3%. If you are a general VAT taxpayer, it'll be 6%. If the offsetting and reclaiming can go on any expenses that you have incurred originally, whether it's fixed assets, rent, this type of thing. Now, one of the I find this to be actually the most important slide that you need to think about. When you've incorporated your company, it's all well and good meeting your tax officer, getting yourself set up, whether you're small scale or general VAT, purchasing your VAT Fapiaos, getting the printer, getting the software set up. But now we have to think about operations, okay? And this is where you need to decide how you're going to operate when invoicing locally in China. And you have two options. Some of it will depend on what your customer says. Some of it you should take control over because you're adamant about it. The first is issuing the VAT invoice immediately to the Chinese customer instead of issuing a debit note or an Excel invoice first. Why is this critical? And I say this is critical, especially if you're in your startup phase, because the minute that your VAT invoice is issued, it goes into the software system. And regardless if your customer has paid or not, you are liable to pay VAT on that transaction. Which means if you have a 90-day payment term or 180-day payment term, you are funding that VAT out of your own pocket, especially if you're a service company, it'll probably be more critical, and you can imbalance your cash flow. So my recommendation is as follows. If you are in your startup phase and cash is critical, issue first a pro forma invoice or debit note to your Chinese customer with all of the information within it, bank account information, service, trade transaction, service fee amounts, VAT calculation, etc. You wait till your Chinese customer pays. once payment is received, you issue the VAT invoice, the Fapiao, to your Chinese customer, okay? This enables you to control your cash flow freely. Now, the trend currently is that multinational companies are the trickiest. They generally want to have the VAT Fapiao upfront. You also find that some foreign invested companies will say it's our company policy to have the VAT invoice upfront before any payment is released. You need to go then through a negotiation, explain your status, and say if they wouldn't mind in the first year, could they operate like this as an exception? Some companies will say no, which in that case means you have no choice but to issue the VAT invoice upfront, and with others, you can negotiate that. Try and stick with the latter because it truly will help you out with your cash flow. The next question that's going to arise, and I did leave this to the last point, will be in relation to cross-border services and the VAT impact on there. Now, I didn't create a slide on inbound services. So, for example, a overseas company invoicing a Chinese company, in order to get payment, there will be VAT deducted on that invoice as well as withholding tax. No exceptions. The more critical is if a Chinese company, a Chinese incorporated company is issuing an invoice overseas, you have the ability, depending on the service, and I've listed all the services here, whether you can get a zero rate VAT or even an exemption, okay? So you've got to think about the flow. These slides are referencing Chinese companies that are invoicing companies that are located overseas. To enjoy any of these VAT exemptions, it is a hefty application procedure. Why? Because it is the goal of the Tax Bureau to earn tax revenue, and obviously one of the key areas that they earn tax revenue on is VAT. So the application is hefty. A lot of documents need to be provided in terms of contracts, explanations, invoices. Explanations will be really around services. They may want to see proof of the types of services that you're offering through emails, through other forms of templates. So be very much aware of these types of applications. Now, VAT compliance and management is important. It's a hot topic. It's something that a lot of people actually don't think about because they don't fully comprehend what VAT means, and hence they don't put great value on the Fapiaos. But as I mentioned, one of the key aspects that one has to think about in terms of maintaining the Fapiaos and not losing them is really having a secure location as to where they're kept, whether that's in a safe, and you need to really appoint someone trustworthy enough to maintain those Fapiaos and make sure that they are not misused in any shape or form. Now, in the last year, there have been 2 updates with the whole VAT tax law system. And, you know, I've listed 3 of them here. One of them is the cancellation of the special VAT invoice verification process, but this only applies to the 8 industries, as I had highlighted. There is a use of a tax classification code for goods and services now, which makes things a lot easier to identify in which category you're going to fall into in terms of VAT rates. And there has also been an announcement about e-invoices. I have not gone into detail in this presentation about e-Fapiaos. It is something that you will see a lot of within restaurants right now, whereby restaurants are, if you have WeChat, there is an app that can help you to create e-Fapiaos. I don't recommend looking into the e-invoices at this time until the full implementation and explanation as to how they can be utilized properly and maintained and not misused comes into fruition. The issue for me in regards to e-invoices is that They can be easily faked. Anybody can create an app that creates something that looks like a Fapiao. And then the question is, is it valid? Is it true? Now, if you want to validate a Fapiao to see that it is a real Fapiao and not a fake one, every Fapiao has a number on it, and you can input that within your tax bureau's website to see what pops up when you input that number, who has owned it, which company owns it, because it's all serial number based, and you can then validate if it's true or not. You will probably want to do that as well with individuals that are claiming reimbursement of expenses. If individuals within your company are reclaiming for expenses and providing then Fapiaos, you may want to make sure that they are not faked. Very commonly, you will have, for example, expatriates get rental Fapiaos from landlords that are fake. It's very, very common. It is a liability for the company to book a fake VAT invoice. So in some instances, it is worthwhile checking as to whether VAT invoices are real or not. In terms of the Fapiao compliance and management, on one level, you can say that the system is being updated, upgraded, things are becoming much more simplified. They're trying to go through an e-invoicing system. I honestly don't know. I think it will take a long time for that to become really something utilized and operational. But what I wanted to also mention is that they are getting more strict in some areas. So an additional item that has to actually go on invoices now, on the general VAT invoices in particular, is the TIN number. The TIN number is your company licensing number, which goes on every single certificate that is issued when you incorporate your company. And that has to now go also on. And it's not considered a valid invoice if it's not on there. Another aspect, which I also think is very important, that needs to be highlighted here, and it's really pertaining more to larger sized companies at the moment, is tax audits. Tax audits specifically on VAT invoices. So if you are found out to have either booked a fake invoice or not a real invoice, or you have been found out to not include all the identification information and correct identification information, then you may have to go through a tax audit to see why this non-compliance is arising. You don't want to go through these types of audits. Very tedious, very complicated. You really just want to make sure everything is legitimate. Now, to end today's conversation, what I want to eliminate is the following. I don't want any of you to be scared of your tax bureau or your tax officer, okay? If you are going into that meeting with your tax officer scared and with a fear, then the whole point of setting up in China is pointless. What you want to do, and this is the same in any jurisdiction that you're going to operate in, you want to make sure that your company is compliant, it's legitimate, and that you're doing business properly and transparently. So when you meet your tax officer and visit the tax bureau, have an open dialogue with them. Don't hide information. It doesn't make any sense to do that, okay? Because they won't then give you the right information you need to operate your business. Now, if you are outsourcing all of this work to a provider, I would really like to encourage you all to still at some point meet your tax officer and visit the tax bureau. I say this just because you will have such a better understanding of how things work physically. And I laugh because it's still all very old-fashioned, but it'll give you such an understanding of how things work. I remember the first time I went to the tax bureau, I got a number. I had one of my staff with me. We sat down, we waited. We went then into a room where there were 9 individual desks with 9 different tax officers seated there. And I don't know, it really did seem very old-fashioned, and it still happens today. So without seeing how this works, it won't really give you an understanding of how the whole tax system works, the negotiation works, the dialogue works. So if you do have the time, if you are traveling, make this as something just to go and look and see, and have a better understanding. When you meet with your tax officer the first time, please do have an open dialogue and communication with them. Talk about, similar with the bank, talk about the transactions you're going to have, talk about what your future plans are, what your short-term plans are, long-term plans are within your organization. Talk about the types of tax liabilities you will incur. You have to tell them whether you want to stay as a small-scale taxpayer or upgrade to a general VAT taxpayer. They might openly tell you that they want you to become a general VAT taxpayer. Then you need to treat Fapiaos with respect. You do need to set up a compliance procedure, particularly if you're doing all of this work in-house. You need to know where they're being stored, who is purchasing them, who is handling them. And last but not least, when you are issuing VAT invoices, make sure that the data regarding the buyer and you are clear. There are no mistakes. The minute there's a mistake, even a spelling mistake, you have to scratch it out, apply for it to be deleted to then create a new one. So you've got to be precise with data and information on these invoices. What a lot of clients do is they also send Fapiaos. They print the Fapiaos, they send them to customers first for approval. And then if the customer automatically pays, then you know that everything is okay. But usually you do that just to make sure the information is correct and accurate. When you receive Fapiaos from suppliers or third parties, for example, landlords, etc., also make sure that they are valid and correct information on those invoices, because you also don't want to go through a situation where they've made a mistake and you have to then go back and ask them to correct it. There are time limits on being able to deduct any forms of VAT. So you have to also do everything on a timely basis to make sure you don't miss out on any of those deductions. All right, so there have been a couple of questions that have come in. So one of them is just, could you reiterate what happens if you lose your Fapiao booklet? Well, as I said, there is a relatively large penalty if you use your booklet. On average, it's about 10,000 renminbi per sheet that has been lost. Usually the booklets are between 25 and 50 sheets. So it could be a hefty penalty that needs to be paid. It really does not look good if you lose these booklets. I mean, it's not that you're going to become now blacklisted, but I mean, it doesn't look good with your tax officer that you have lost it. It could raise the question, do you need to have a tax audit done within your organization to understand what type of compliance procedures you're going through? The next question is a little bit funny, but can you trust the tax officers that they will benefit your company? Well, let's face it, anywhere in the world, tax officers are looking to generate tax revenue. So in any shape or form, if you are looking to apply for any form of exemption, deduction, claim, or for example, if you are in the high-tech sector and you are looking to get a lower profits tax rate down, from 25 to 15%, and you want to go through that application, they're not going to make your life easy. The same if you are looking to set up profit repatriation strategies and you want to get those contracts approved and registered at the tax bureau. Again, they're not going to make your life easier, because repatriating funds means that funds are not kept in China for further investment. So ultimately, you need to understand, their mentality, which is their job is to earn tax revenue. Let me just add one tidbit here. When you look at the city of Shanghai, every single district in Shanghai has a tax bureau. And there is annually a competition between the tax bureaus as to how much tax revenue they are earning. Obviously, business centers are going to earn more because there are more businesses that are registered in those locations. But there is a competition going on between them. So ultimately, the goal and KPI of any tax officer is to make sure they earn as much tax revenue as possible. So it's important for you to know, can you do exemptions? Can you apply for credits? Can you get reductions? And is it worthwhile to go through the battle of doing these applications? In some instances, you may want to give up. In some instances, you may want to push forth. If your tax officer gives you an outcome that you're not happy with, you always have the option to go up the ladder and appeal the case. If you do go through an appeal, you really want to be sure to go up that ladder, because from a cultural perspective, your tax officer would have lost face. So you've got to know what battles you really want to fight for. VAT seems so the next question, sorry, is VAT seems so complicated. How can I obtain accurate information? How you can obtain accurate information is solely by talking to your tax officer. You can't even rely on corporate service providers, because what they are going to tell you is only what is based on their experiences with other companies that they have worked with. But the ultimate decision maker from anyone about profits tax, VAT, consumption tax, transfer pricing is going to be your tax officer. So you want to develop a very good relationship with that person in order to be able to get accurate information. Now, the advantage of working with outsourced providers is that through their experiences, they have the ability to appeal cases in case there is an outcome that you don't like. And that's the advantage of working with either tax lawyers or corporate service providers to help you in those situations. But don't underestimate the relationship that you need to develop with your tax officer to, one, get accurate information, and two, to work great together so that if there are cases you want to appeal, you know, you've developed a solid relationship that it shouldn't be a problem to then appeal them. All right, so there are some questions that have come in. Wait, hold on, there's one more question that's come in regarding the withholding tax. So I'm assuming this is in reference to what I mentioned earlier about overseas companies invoicing Chinese companies. So let me just say again what I had mentioned. If an overseas company, a UK, German, US, whatever, an overseas company issues an invoice to a Chinese company, prior to the Chinese company, whether it's foreign invested or local, can remit the funds, taxes need to be declared and paid. And the taxes would be VAT as well as withholding tax. And this is in reference to service invoices. It is not in reference to trade transactions. So in terms of service invoices, be aware if an overseas company issuing to China, withholding tax as well as VAT needs to be declared. The next few questions that have come in have all been kind of client specific, so I will touch on them separately with people individually. That is the end of today's presentation. Like I said, it's really to give everyone a general overview on VAT, on profits tax, what are the outcomes and the new things that are occurring since January 1st, 2019. If you do have specific questions, please do let me know. You can reach me per email at christina@woodburnglobal.com or info@woodburnglobal.com. In addition, if you enjoyed this webinar or this series and you want to know more about what's up and coming, subscribe to our various social media channels, our e-campaign as well, or you can just, connect with me. That's not a problem as well in the various channels. Last but not least, we have our last session tomorrow, which is on outbound payments from China. So exactly this question that came up about withholding tax and VAT. These are all things that we're going to talk about in terms of cross-border transactions and outbound payments from China. And we're also going to talk about the importance of developing profit repatriation strategies in time. So if that topic interests you all, please do sign up. Thank you again for joining me, and have a wonderful afternoon and evening. Thank you and goodbye.